Welcome back, everyone. This is Thomas Triple T Tie with another new bullish crypto analysis. Before we dig in and take a look at the daily Bitcoin analysis, remember this is for edutainment only and not to be considered as financial advice. Additionally, when you feel value's been added, feel free to smash the like, ring my bell, hit subscribe if you haven't, and share your thoughts. And please share my analysis with others to help, especially newbies. Also, it helps the YouTube algorithm to promote the videos too. Appreciate it. Let's dig into the news. There's only really one news item I want to cover, and that's basically Morgan Stanley. They said that Bitcoin is close to being a currency, and let's take a look at why they think so. They said that Bitcoin has reached an important milestone in widely being used as a currency, with the Strike integration with Blackhawk Network allows Bitcoin to enter physical locations like retail and restaurants, which make up 85% of the U.S. transactions. And the low transaction costs and merchant adoption will likely lead to less volatility over time. So that's good news. Adoption is always good, and that's going to bring, I agree, more adoption, more stability, but we're a little bit far from the stability part. I think we're going to enjoy the volatility part for some time yet, but adoptions is good. Let's take a look at the crypto market heat map right now. Bitcoin 39.9 and dominance 40.87. That's a drop from 41 or above 41. Most coins are in the green today, so that's good. Ethereum 2.9, make it 3K. Dominance 19.29. Luna is red, one of the few that's red on this chart here. But overall, pretty good day for crypto. A little bit of recovery. And the crypto market cap, 1.85 trillion, up 0.89%. We're still below 1.9. So 1.85 is actually pretty low for the week. Here's Bitcoin here. You see that 24-day period, 1.39 here on the market cap up. So that's we're having a slight recovery, but we're still down overall for the week. Let's take a look at the chart here. Let me save it first before I lose it. So we have 3 descending daily bearish candles, and the current one is white or bullish. And what happened? This candle yesterday, it was choppy between roughly 39, what was it? 39.2K, and it wicked as high as 40, make it 40, can't see from here, 40.5. It's so dark where the bright light is up here. I mean, the screen is dark compared to the white light. And then it printed this candle today. It wicked this candle today wicked down as low as roughly around 39.3K, and it wicked as high as 40.1K. So a bit of recovery. It's just hanging just above the support level of 39.6K, and right below the ascending resistance now. So it's getting squeezed right in there, and we'll see what it does based on the indicators here. Where it's at, it's in between the descending Bollinger basis, which is at let me see here. The Bollinger basis is at 41.6. Funny how that works out. Which is also by the 50-day moving average, kind of. 50-day moving average is 42K. And the bottom of the Bollinger Band here is roughly at 37.7 0.8K. So it's right in between the middle of the Bollinger Band and the bottom. And the 50-day moving average is still below that. And as far as the bull market support band, it's still below that. And the bull market support band has a range between 42.8K and 43.6K. So still in the bearish territory. Hasn't changed much from yesterday, except for a little bit of recovery here with the more bullish candle. Down below in the volume, we have very tiny amount of volume, still going back down below the moving average after 3 days of being above the moving average. As far as the white J line of the KDJ, it finally penetrated down through the blue K line and the red D line. And so just below that right there. And it's putting in registering 35. And 35 is more near towards the start of the bottom range. Start of the bottom range is at 20. So it's heading towards the bottom range. I gave that a bear. The white MACD line is continuing to trend just below the red signal line, putting in the, I believe it's the 20th consecutive bearish histogram bar. But it's still pretty thin, and it's currently registering at negative 804, and that's getting near the bottom of the range. The bottom of the range is back here. If you trace the cursor's line, it's right there near the bottom of this current range. Going back to this bottom is February 2022, end of February. So it's near that bottom range. And when it hits the bottom range, it tends to go back up. For the RSI and the CVD, they flipped up slightly. Here's the red RSI and the blue CVD line, just slightly upward. And RSI is currently at 42, which is below the middle mark for RSI, which is 50. And it gave that a crab and a bull. Crab because it's more crabbing sideways, bull because it's just trending slightly up. The blue CVD line is at 1.811 million. I gave that also a crab and a bull. The white momentum indicator, or MOM, is trending down still after it flipped up for a bit of time. And it's currently registering at negative 1,237, and I gave that a bear. So momentum's dropping, but and CVD and RSI is mostly crabby sideways, but a hint of upward movement. But KDJ is also down, and MACD is also bearish. So overall, I gave that 2 crabs and a bear, same as yesterday. So it's gonna crab sideways with a bearish tone. So that's what it did yesterday. Crab sideways and hung at the bottom of the range. So the range right now, the short range would be 39.6 as the support, and the ascending triangle would be the low resistance at 40.2. However, if it breaks that, that's a little bit more bullish. It'll strive for the resistance here at 41K. So more than likely, it'll just continue to crab right along the 39.6K here. But we'll see what happens on Sunday. Sunday tends to be a little bit more interesting day, because that's right before the day, right before the market opens. So overall, 2 crabs and a bear. Let's take a look at actually, before we look at this, I want to show you the max pain prices. We move that over here. Max pain prices is roughly, let me show it to you. Oops. Didn't mean to minimize it. There we go. So his max pain for, well, actually, that's not the one I want you to show first. Hang on a second. Let's go to, let's do this one first. So max pain for the 24th will be 40. Max pain for the 25th will be 40. Max pain for the 29th, here you go, will be 42. So we're looking between 40 and 42. And last one. And May the 6th. Why is not magnifying? Sorry. Not sure why it's not magnifying. Anyways, it's 40. So you're looking between 40 and 42. So, but if we look at the open interest here, the day we want to continue to focus on, I've mentioned this several times, but we'll just go through it again, is the 29th, where it has high open interest for options, puts, and calls. Calls are the green ones. That's called the option to buy, but not obligation. Puts are the red ones here, option to sell, but not the obligation to. And so 29th, and let's look at the volume. Volume here, we're looking at 24th. It's got volumes are contracts that have been filled already. Open interest are contracts that are still open and pending. So decent volume here on the 24th, but the 29th has bigger volume, and May the 6th has even more volume. So a couple of days to watch out for. But volume's already filled. It's the open interest that matters. So that's max pain for you. And let's take a look at the heat map here. It's weird. Let's look at the sell walls on top. We have the 50K sell wall still there and not much down below that. And we have buy walls below here. You see how this one's coming in pretty thick yellow and orange here, right around 38. That has grown thicker since 11 o'clock on the 21st Pacific Standard Time. So it's gotten thicker. So if you people are getting ready to buy the dip here, right around 30, around 38, just north of 38 and south of 38 slightly. And 35 is still there for the buy wall. And 30K, you notice it's getting thicker here too. 25K, and that's getting more yellowish too. And the 20K. So, yeah, there's more down here. More, the wall's getting thicker, expecting a potential big wick down. Why is that? Why is this just a magnifying glass? Hang on, let me try to get back to hang on, there we go. As far as the I was trying to click on a button, but it's a screen grab, so the button actually doesn't work. So this is the high block capitals liquidation levels, cumulative liquidation delta for 25x to 100x, high leverage only on Binance. And here we have the short liquidation, high leverage short liquidation levels up here, long liquidation levels down here, and you take the open interest or the money in the shorts, you minus from the longs, and you get the difference, which is $2.23 billion on Binance alone. The negative just means it's excess shorts. Yeah, at this amount, it's not going to influence someone to take a counter position on the long side, high leverage counter position to try to win it. So it's right now it's all mostly macro factors impacting price. And we're back to the beginning. So this is my first video for today, and I'm gonna take a break, go get some exercise and hang out with some friends, and I'll be back for the I believe today is Solana's video. So I'll see you then. Peace. Enjoy your weekend.